investors watching your money this morning. Joining me right now is Optimal Capital Director of Strategy, Francis Newton-Stacy, Slatestone Chief Market Strategist, Kenny Polcari, and the Fitz-Gerald Group Principal, Keith Fitz-Gerald. Great to see everybody this morning. Thanks so much for being here. Francis, kicking things off with you with a market that is really searching for direction this morning. Fractional moves. It will be, of course, another big day for earnings today and throughout the week. We've got Verizon, IBM, Tesla, all reporting later today. That may very well move markets. Streaming giant Netflix beat estimates last night. Subscriber growth jumped, and yet the stock is down 2% this morning. What's your take on the earnings season, and what are the main takeaways from the third quarter from your standpoint?
Well, earnings are strong despite the fact that we had the Delta variant, and I think that that's pleasantly surprising because what we're really looking for is a peak in growth, potentially a peak in inflation month-over-month numbers. I know that, that doesn't help the average consumer whatsoever. That's just a market viewpoint. And we're looking for a peak in earnings growth, and actually the third quarter is looking pretty good despite the Delta variant. And then you add that to the fact that we have a peak in the Delta variant cases, and it looks like COVID is ameliorating for the moment, and you might see an acceleration in the month-over-month numbers in GDP and also earnings growth from the third to the fourth quarter. So that's starting to get priced in, and that's why we see this little reflationary trade. We also see something very unusual with rates moving higher at the same time equities are moving higher, and that's just saying that so far these companies have enough pricing power that this inflation that quote-unquote may or may not be so transitory is not yet affecting you're not having too much margin compression, and balance sheets are looking good, particularly for these tech companies.
Yeah, I mean, one thing that worries me is that we've got a lack of visibility, right? We don't really know where COVID is going. We don't really know where things are going in terms of lockdowns as well as these mandates. We reported earlier that now Mayor de Blasio putting a mandate for vaccine for all New York City workers.
That's true. I mean, I'm not for mandates. I don't think people should be forced to do anything personally, regardless of how you feel about the efficacy of the vaccine or what have you. Right. I do think that these people that are leaving their jobs, it's going to prolong the labor situation. What's funny is the Fed is holding pat as far as tapering because, of course, inflation is becoming problematic. And they're also now pricing in 2 rate hikes for the end of 2022. So we are living in different worlds as market participants versus, the average Joe. And the really sad thing about all of this is that this is going to exacerbate the wealth gap pretty dramatically. But from the market perspective, I think the market's going to have more challenges next year. We're facing, lowered liquidity amounts. Commercial and industrial loans have kind of fallen off of a cliff. General things that, fiscal stimulus, even though we're getting a big package, it's coming at a slower rate. And then we've got the tightening. But in the interim, we're excited about, a re-acceleration in growth from the third to fourth quarter. There's a lot of risk on the table, but markets are liking this.
A lot of risk, and people are going on that risk curve, Keith, with Bitcoin. Take a look at Bitcoin price. The first Bitcoin-linked ETF jumping better than 4% in the trading debut on the New York Stock Exchange yesterday. Got a couple of ETFs now out there, including Bitcoin in the strategy. What are your thoughts on where Bitcoin is today?
Well, there's a word that I don't use very often when it comes to the markets. How cool is that? Because now you've got digital money. This is a historic moment in financial history. I have a question as to whether or not it's actually going to keep up with Bitcoin prices or whether we're going to get futures-related context, because you're 2 degrees off from the real thing, if you can even call Bitcoin a real thing. But again, great for the consumer, great development, historic moment in financial history. I love seeing it. And personally, I may even make some money at this yet.
Kenny, what about you? You like Bitcoin here? What are your thoughts? You've been a stock guy for a long time. I mean, the Federal Reserve is really driving things in many ways. Got a new Reuters poll showing that economists do not think the Fed is going to raise interest rates until 2023. But we heard Francis say maybe the end of 2022. You say inflation is not transitory. So where do you think monetary policy goes?
I don't. So I don't think it's transitory. I think that I think they've, quite honestly, I think that they're starting to lose control of it. And I think it's also very interesting that Jay Powell has kept that narrative that tapering and interest rates are mutually exclusive. So one doesn't necessarily mean the other happens. I also think it's interesting that most economists polled, or the street analysts and strategists, think, like Francis, that we're going to get rate hikes in June, or maybe even September of next year, when suddenly this Reuters poll shows the economists saying, oh, no, not till 2023, which I think is all part of the narrative with the Fed trying to control the calm and the angst in the market, because I think they're trying to push that conversation out. You know, this formal poll of economists saying, oh, no, don't worry, it's 2023. We can start to taper and no one has to worry about rates. And I think that that's a strategy to get the markets to calm. And I don't think it's going to work, because I think inflation is ahead, and I think the Fed's going to be forced to do something probably in June.
Do any of your ideas change should Powell not be reappointed, Kenny? I mean, look, there's this movement to attack Jay Powell and the Fed so that they can get in a more progressive Fed chairman. We know what's behind all these stories now.
Right. So listen, it's like that old comment, right? It's the devil you know versus the devil you don't, right? And so we know Jay Powell, and quite honestly, I think Jay Powell has done so far a pretty good job of trying to control the narrative and manage the situation. But if there's a disruption in Fed leadership in January, if for some reason he's out, who's going to be in? What's their thinking? What's that going to do to the Fed's thinking? What's that going to do to policy? And so it's going to create a whole new level of angst that the market's going to have to deal with. And you and I both know that the first reaction of markets in uncertain times or angst times is to, shoot first and ask questions later. So they'd sell first and then they'd ask questions to see, okay, what does this mean now? And then the markets might rebound. But I don't think it's a smart idea, quite honestly. Think what you want. I don't think it's a smart idea to replace Jay Powell at this moment in time.
Yeah, well, the progressives are driving their narrative. Great to see everybody this morning. Thank you so much. Francis Newton-Stacy, Kenny Polcari, and Keith Fitz-Gerald. Quick break, and then we've got much more ahead this morning.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.